Do you want to share a little bit about how you came to be a specialist in renovation financing?
Okay, I am, as I've told Tammy before, I'm one of the only people in this market, in this industry that has dedicated, well, let me start over. Good morning. I'm Todd Fogel, renovation loan specialist for Guaranteed Rate. And I'm the only person in this market, in this industry, that has dedicated his career to renovation financing only. I've been with Guaranteed Rate for over 3 years now. And prior to that, I was with Wells Fargo for 9 years. And I was the dedicated specialist for Dade, Broward, and Palm Beach County. And the premise there was we did not allow our loan officers to originate a renovation loan. It had to come to me as a specialist. And I was over about 110 loan officers and over 40 bank branches in South Florida. Wells Fargo closed their renovation division at the end of 2017, and I got recruited to Guaranteed Rate, and now I have regional responsibility for Florida, Georgia, South Carolina, Louisiana, and Alabama. But to answer the question, how did I get going on or get involved with renovation financing? When I was at Wells Fargo, they allowed us to specialize. Down payment assistance, veterans, renovation, and my background is in renovation here in Fort Lauderdale, Florida. I have saved 6 houses from demolition in the historic district, had them lifted off their foundation, worked with the city, and had them relocated and saved. So my background is in that, and I've renovated historic homes for years. And so it kind of meshed everything together, and when I was allowed to specialize, I jumped on it. And it's really a niche product that I have fun with. And now in the market today, with low inventory and high prices of what's available, the fixer-upper is really a great option. And a lot of real estate agents and consumers don't even know that this exists, that there is a product out there that allows you to finance needed repairs or desired improvements on top of the purchase price into one first mortgage.
Awesome. So can you kind of go through how the program works for us?
Okay, so how it works, a renovation loan can be used for needed repairs, desired improvements, failed inspections, open permits, code violations, or even to add square footage or a pool. So when you have that listing that you go to look at and it says no financing, cash only, that is a renovation loan. You say to the seller, well, why are you listing it as no financing? Oh, well, it's not going to get financing because we have no kitchen, or it needs upgraded electrical, or it has a roof leak, or something's going on that it would fail an inspection and not get insurance. That's a renovation loan. So I always tell my audience, don't try to learn this product to try to recite it, to be the expert on it. Don't miss opportunities. So if you walk into a house and it's missing a kitchen, ding, 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 that's a renovation loan. Failed inspection, that deal's not dead. That just becomes a renovation loan, and you can't use regular conventional financing. So the way it would work is, to give an example, let's say a house is $250,000 and it needs a new roof and they gutted the kitchen. So the buyer would go ahead and go under contract for $250,000, and they could then have the house inspected, marry their wish list with the home inspection, and have a single contractor go out there and write up a repair bid. Let's say it's $30,000 to put a new roof on and to update the kitchen for the missing cabinets and the counters and the appliances. We send that repair bid to the appraiser, and the appraiser will appraise the property in the future as if all the repairs are done. So ideally, I want to see the house appraised for purchase price $250,000 plus repairs $30,000. I want to see that house appraised for $280,000. Then the borrower, depending on loan program, would put their down payment based on $280,000. We as a lender, based on loan program, would lend the difference based on $280,000. So in essence, we're combining the repairs at point of sale into one first mortgage. We're closing on the house in its current condition, and we're working with the buyer and their contractor that they've selected, that we have validated, to do the repairs after closing. Now, we're not handing them a check for $30,000 at closing and say, go fix your house. Nor is this an equity line that the borrower gets a checkbook and they're writing out checks and they're buying the appliances or they're buying the countertops or they're paying the roofer. We hold that money back in a draw account within guaranteed rate, and we dole out draws to their contractor as he does work. So when I say validate, we're not approving contractors, nor do we have an approved list that I hand out to say, pick one of these guys. I send out a comprehensive email that tells the borrower how to shop for a contractor and what to look for and what questions to ask, how to fill out the bid process, etc. And when we do a validation, we're not collecting income asset credit on contractors. We're looking for contractors that are in business for 2 to 5 years that have done similar jobs. So they fill out a one-pager about their business. Their bid has to match their license, has to match their insurance, has to match how they're listed for this in the state that they do work. Okay, and they must give us 3 references of like jobs that we can verify their work. So if we have a guy that's not licensed, we can't use him. They have to be licensed and insured in order to work on a finance property. So based on program, there's several different programs out there that people aren't even aware of. There's the FHA 203K. There's the conventional home style renovation loan. Freddie Mac has the choice renovation program, and there's even a VA renovation program out there. All that guaranteed rate has access to. Okay, so FHA I would use for a first-time home buyer. They're short on cash, they need a low down payment, and they want a low interest rate, and they want to be able to finance some of their mortgage insurance. I would go FHA. I would use conventional is if the property price plus repairs exceeds FHA loan limits. FHA loan limits right now are 460. I'm looking at my cheat sheet next to me. 460, and Fannie Mae is 647,200. So I would go to Fannie Mae when I have a property that's 450,000 and they're putting 50 into it. I can't go FHA anymore. I'd have to go conventional. I would also go to a conventional product. FHA is owner occupied. Conventional is owner occupied, second home, or investor. So if I get a second home renovation loan, I've got to use a Fannie Mae product. If I get an investor purchase, then I would have to use a Fannie Mae product. And second homes and investment properties are single unit. I can't do a multi-family unit for a second home or an investment property. So that's a good starting point on that. Other questions? Benefits to, well, let me just look. Misconceptions. I'm thinking of questions to be able to spur the dialogue. Misconceptions. A lot of people think that these take a while. Yes, they are a little more labor intensive than a regular loan. I always request when real estate agents are writing a sales contract, 45 to 60 days. We cannot close in a 30-day closing. It just becomes too fast because there's more moving parts. After the inspection, now the borrower or buyer has to interview contractors. The contractor has to write up a bid. That process is going to take probably a week or 2 after initial sign date of that contract. Once I receive a repair bid, I count 45 days to close. So if a buyer were to write a contract today, we're looking to close the middle to the end of March.
On that, it's, you know, I've heard before that we need 3 contractors' bids, but you're saying it's just one contractor?
It's just one. I do recommend to my borrowers that they shop, interview a couple contractors. I don't need to see 3 separate bids. I need to see one final bid. And I always instruct or advise my buyers to don't look for the cheapest guy, look for the guy that you're going to want to see every morning and have coffee with as he's working in your house. It's someone that's going to be in your house that you want to feel comfortable with and trust. And the cheapest guy or the most expensive guy might not be that fit. So always look, money is money. So we want to look at the bid and get the best cost, but we want to have someone in our home that we feel, my adage when I always had contractors in my home, treat the house as if it's yours. That's all I ask of you. Treat the house as if it's yours.
So have you had problems getting contractors to actually submit bids because they're so busy?
It has been an issue, but real estate agents, there's so many ways of networking to find a good contractor. And a lot of contractors get wrapped up into one job and can't multitask to run 2 projects at once. And so at the height of COVID last year, contractors were hard to find. Now I'm seeing that not being an issue.
What about draws? Is there a way for them, if it's a large job, can they do draws, or is it just a one-time payout?
Okay, depending on loan program, and the nice benefit of working with guaranteed rate on a renovation loan is the borrower is with us from today to loan approval, to appraisal, to closing, to post-closing. Guaranteed rate has their own draw center. So after closing, for example, when an inspector didn't go out or a draw check didn't get processed, my buyers call me. Hey, Todd, I didn't get my check. What happened? The inspector was here last Thursday. It's now Thursday of the following week. What's going on? I get on the phone or on an email to our staff. So I still have control with the buyer to be able to help. And that's really an important benefit, that we are with them till close of project. So we are, it's instead of turning that file over to a third party after closing where they just become a file and a number, the relationship is established, and me as a renovation specialist, I know how to get them to closing and I know how to get them to complete a project because I've done it myself. So that's really, really important. But to answer your question on draws, depending on loan program, FHA, where the repairs are under $35,000 on a streamline, we're allowed to do 50% upfront to a contractor and 50% upon completion. On a full K, where repairs are over 50,000, over 35,000, I apologize, it becomes a draw system where they're not allowed any upfront money in lump sum, but they are allowed a partial materials draw and permitting to be able to start the job. And Guaranteed Rate is a tech company that bought a mortgage company 20 some years ago. And being techie, we have created in the renovation division and bought software called Built. Built is a virtual dashboard that the homeowner, the contractor, and the inspector all have access to. So this will be answering your draw question. So long way around to get there.
Yeah.
So if the contractor, let's say, has torn off the roof and he's dried it in, he says, I'm ready for a draw. He goes to the dashboard, click, click. It prompts the inspector to go out and take pictures and upload those pictures. And then he goes to the dashboard, click, click. Now the borrower goes in, click, click, and authorizes the draw. The draw can be paid out one of 3 ways: a 2-party check to the contractor, a 1-party check to a 2-party check that goes to the borrower that he signs over to the contractor, a 1-party check that goes directly to the contractor, or direct deposit. So the homeowner says, this is a family friend, we know the contractor, we want this job to go fast, let's do direct deposit. So it's really a great way to do it. And so to answer your question, depending on loan program, there are upfront monies in lump sum under the FHA streamline. And then the other programs, depending on the dollar amount of the repair bid, it becomes on draw basis. And this is for our protection as a lender and the borrower's protection. We're not going to hand a contractor a lump sum of money without work or without something tied to it in buying materials or paying for permits. This protects our borrower and this protects us as a lender. and it's a smart way to do business. And we hope when a borrower is interviewing a contractor that he can carry the job to the first draw, that he's not waiting on a draw payment in order to be able to start work. Hopefully, in the interview process, when you find someone 2 to 5 years in business, they're established enough and they have vendors that they go, okay, I can go down, I can pull the permits, and I can get my vendors, my orders going because I have a line with my vendors and I'm good to get going. Not waiting for that check, waiting to start. That becomes scary when you're dealing with a contractor that can't go out and buy tile or can't go out and do that.
So Todd, I've always steered away from renovation financing for the main reason that I don't want agents and borrowers upset with me because of the process. So I wanted to kind of go through how much additional work is it truly for the real estate agent or professional to accommodate a renovation loan?
Well, when you're dealing with a specialist like myself, the extra work is minimal on the behalf of the real estate agent. The borrower and I have to do a little more work, as I explained, and I'll go through that with you. And that is a big misconception on that, and I understand your concern. A lot of lenders have gone out of the business of doing renovation. One, they didn't know how to perfect it, and they didn't have quality, skilled people that were able to do the explaining and originating. Now, with me personally doing this for 12 years as a dedicated specialist, modestly, I'm good at my job. And I tell real estate agents and I tell referring loan officers and I tell clients that. And I don't say that bragging, I just stating the fact. I'm good at my job. And I should be good at my job doing this for 12 years. And I should have the confidence to be able to tell you that. Because there's a lot of lenders out there that say, oh yeah, I do renovation. Okay, how many did you do last year? I closed one. It was really hard. Those are the lenders you want to stay away from. And that's the misconception that your agents have, that this is not a good program. Yeah, they worked with Johnny Mortgage, and Johnny's never done one or did one a year ago, and he flubbed through it, and it took 90 to 120 days, and it was a nightmare. But when you're dealing with a specialist and you're dealing with a company like Guaranteed Rate, we're third for HUD endorsements on renovation financing. Me personally, bragging a little bit this time, 2021 rankings came out and I was number 7 for renovation in the nation for our company. So I know my stuff, and I've written a continuing education course for the state of Florida where real estate agents can get continuing ed credit and learn about renovation financing. So your concern is valid. I would have that concern if you were dealing with an inexperienced loan officer doing renovation who doesn't do it on a regular basis and does every other loan product, so they're distracted. My pipeline is only renovation. My mindset and my little thinking and my organizational board and my organizational sheets that I keep my leads on, all is geared towards renovation. So that's my mindset. So valid concern, but I would say for you, you shouldn't have that concern. The only extra work that the real estate agent has to do when they're writing the contract, they need to write it for what the house is being sold for, period. They don't worry about the amount of the renovation or anything like that. But on the real estate contract, when they check financing, check and write in 203K, write in Fannie Mae Homestyle, write in the word renovation. It puts everybody on notice. Then we're putting everybody, seller, listing agent, title company, everybody who gets this contract reads it. Oh, they're doing a renovation loan. And that puts them on notice. The extra work for the borrower is going to be interviewing contractors and coordinating a repair bid. And depending on the size of the repairs, under Fannie Mae, if repairs are over 50, under FHA, if repairs are over 35, we have to get a HUD consultant involved. And a HUD consultant does a feasibility study as a check and balance that the numbers work. So those are the only 2 extra moving parts, but I'm involved in that with the borrowers. So I'm guiding them. I don't say to them, go get a bid, call me when you get it. I say, when your contractor's out that day, get me on the phone, and I'm going to introduce myself, and I'm going to help him along to fill out that repair bid. When it comes to needing a HUD consultant for a feasibility study, I have several HUD consultants in the 5 states that I work that I can rely on, that they're going to work with the contractor and the borrower to be able to get the report done for our financing.
So Todd, Tracy asked a question in the chat, and she wants to know how different the guidelines are for different states. Are they fairly similar because they're FHA conventional guidelines per se?
Correct. And for you as a loan officer, I underwrite to your guidelines. We have the same guidelines: FHA purchase, FHA refi, Fannie Mae purchase, Fannie Mae refi. So I'm underwriting to the same guidelines, same credit scores. There's no different overlays that I'm seeing over and above what you see on a regular loan. So, and we underwrite to those national guidelines. I don't believe they change per state. The only thing that would change per state would be loan limits.
Cool.
But
Okay.
good question.
Yeah, so I just, let's see, I just had, as far as benefiting the home buyer or homeowner, can you maybe go over a little bit of the cost difference between, like, is there additional fees? Are there additional inspections that may cost some money?
Yep. And to start with, benefits to a home buyer or benefits to a homeowner, let's start for someone who is listing their house. And they list their house and they go, as is, no financing, because the house has issues. The benefit of doing a renovation loan is they list the property and say, eligible for renovation financing. That's going to open up their looks. So the benefit to a homeowner who is listing their house is they can increase their looks by using a renovation loan or suggesting a renovation loan with their agent. So that opens up their possibilities. And instead of getting a lowball offer on a house that's not taking financing, you have someone come in that qualifies for financing and they might get more money. For a home, for someone who's buying a home, it opens up possibilities for them. Right now, the craze is HGTV, Property Brothers, Fixer Upper, home, Forever Home. There's so many different shows. And for me personally, I watch them on a loop. I'm always watching just to get inspiration, hear the lingo, and stay in that mindset. And it's a lot of fun. And for people out buying houses, it puts them in a good mindset. It gives them inspiration. Wow, I can do this. And when they find a lender that they can work with, wow, they can really do it. So the benefit to a homeowner on this is you take the imperfect home in your favorite neighborhood and make it your perfect home, just through a renovation loan. You customize that home with the kitchen and the finishes that you want. You fix that roof that everybody walked away from on a great house in a great neighborhood. So there's so many benefits. But in your question of costs, the interest rate is probably about 0.5% higher than regular conventional or conforming rates. And the reason for that is we're taking a home typically not in lendable condition. We're financing over and above that purchase price. We're closing on that house in its current condition and taking a leap of faith that the contractor and the borrower are going to get the work done after closing. As a lender, we have to charge a premium. Is 0.5% exorbitant? No. We're not charging 1 or 2% higher. We're charging about 0.5%. And to walk away from that house or try to buy that house as cash, as opposed to being able to financing it at 0.5% higher in interest rate, that becomes a good cost of business. But additional costs, there's going to be cost of doing the inspections to get the draw money. There is a supplemental origination fee that goes to our draw center because they project manage after closing. So we're with the borrower until closing for 60 days. They might be with our draw center for 90, 120 days. So we have to pay a flat fee to them. They're going to have to pay possibly for a HUD consultant. but a lot of those fees are financeable. So that becomes a great benefit to them.
Awesome. And then you had mentioned pools. Do we have a lot of people financing in pools through renovation loans?
Believe it or not, in Fort Lauderdale, I do a fun day where I'll just go to open houses, and I have a t-shirt that says "Got Renovation." So I wear my t-shirt and I go out to open houses, and they go, "Oh, are you a contractor?" And I said, "No, I'm actually a lender." And they said, "Well, we love, you know, I'll be talking to people walking through the house, and they go, 'We love this house, but we saw a house down the street that had a pool. And this house we like better, but it doesn't have a pool.'" And I said, "Have you ever considered a renovation loan? We can put in a pool." And it's the same premise. It's a Fannie Mae product only, not an FHA product, Fannie Mae product, and the same premise. We get a bid for the pool. We send that bid to the appraiser. The appraiser appraises the property as if it's a pool home, and that pool's in the ground. We close on the house in the current condition, and we put the pool in after closing. So it's really pretty cool.
That is really cool. Is there anything in particular that's not covered that you couldn't do with renovation financing?
Luxury items, putting in tennis courts. Pretty much there is so much that is approved, and I don't come across in my years. I haven't gotten a bid and go, "Oh, can't do this." Just weird stuff. Someone wants to put in, you know, something that wouldn't be typical for the neighborhood. You're putting a pool. I would say I wouldn't suggest putting a pool in a non-pool neighborhood. You're the only pool in the neighborhood and we can't find comps. Or we're increasing the square footage and bedroom count above the neighborhood. The neighborhood is a 3-3 at best neighborhood, and they're trying to do a 5-4. We create the flower of the neighborhood. We're going to put in a 5-car garage when every house has 2 cars. You know, just weird stuff like that. I would advise the buyer and the contractor on, but pretty much anything you can think of: windows, floors, doors, roof, termite, air conditioning, appliances, anything you can think of, we can work with. And we just introduced last year the Freddie Mac Choice Renovation Program, which allows us to work with big box stores, Lowe's and Home Depot. And that's a new caveat and a nice new program. A lot of homeowners want to be able to go to Home Depot and say, "Install my kitchen," or "I'm just buying appliances and I don't want to have to hire a contractor who's going to mark stuff up." We can use the Freddie Mac Choice Program, work with Lowe's, do a purchase order for the contract for the appliances, and that's what we submit. The houses, they stripped all the appliances. There's nothing. And the buyers don't have the money to do it. So they want to do a renovation loan to put in brand new appliances. We can do that under a Freddie Mac Choice.
That's awesome. So, and then can you tell us a little bit, I know we're running a little short on time, but I really wanted to talk a little bit about investment properties. So if we've got somebody that's purchasing investment property.
Yep. So investment and second home are kind of, in my mindset, I lump them as the same animal, because you can only do a single unit. You can't do a multifamily on a second home or investor. So an investor property, they would have to be buying that little single family residence and wanting to do renovation on it. My mindset, thinking as an underwriter, because my experience is 30 years in the business. I've done retail, wholesale, processing, underwriting. I was an underwriter in the state of Florida. So I always have that hat on when I'm putting a file together or I'm advising homeowners, buyers, real estate agents on putting a transaction together. I want to hear from an investor. I'm buying this house and we're going to put it as part of our portfolio and we're going to rent it out. I don't want to hear from an investor, "We're going to buy it, we're going to flip it in 30 days. We're going to slap it together and we're going to flip it." That puts us as a lender in the short-term loan business, and we don't want to do that. We want to be able to work for our company and be able to not be in the short-term loan business. I don't want my team working on a file for 60 days for the borrower to turn around and pay that loan off. We worked very hard for short-term money. And so I always want to instruct my investors, "Hey, we have this program, but I want you to be of the mindset that you're going to keep the property. Now, if after closing, they get that house finished and someone walks in and says, I love it, I want to buy it, and they sell it, then they sell it. But I don't want to know that going in. Just
Yeah, absolutely.
So investors, it does work. It is in my just thinking, it's very few and far between that I see. Investors are looking for that deal. So they're going to pay cash to get that deal and lowball on a purchase. Also, investors don't want to have someone else control their money. So investors become a different animal or a different profile to work with, but I do have them. It's just cookie cutter of my business is people buying homes. But also something to think about is we can do a renovation loan on a refinance. All this rain's happening. People are getting leaky roofs. They don't have money to repair their roof. They can do refinance and renovate and fix the roof and put that roof repair on the refinance. Update, we're going to stay in the house. We're not going to move. Update the kitchen, update the bathrooms. There's so many things you can do in a renovation loan that you can do for a purchase or a refinance.
Yeah, that's great. I think at this time, if anybody has any questions, if we haven't covered it yet, I'd love to hear your questions. Anybody? No?
And I can cover, we have, it's 12:35. We have till 1.
I think that our invite was till 12:30. Is that right, David?
No, we were till 1.
Okay,
It was
great.
12 to 1. So, you know, if he can keep going if he wants, and if anyone has any questions, just type it in on, type it right into the box. No problem.
Great.
So for real estate agents, how would this, just to think of a question to be able to answer for you that give you more food for thought after this webinar, how would this impact my business? If I did one renovation loan and worked with a lender that I trusted, that I knew could get me to the closing table and give my buyers good advice, how would that impact my income on a monthly basis to be able to close one loan that I didn't take the opportunity to explore last year? Oh, renovation financing, it's really hard. I'm not going to do those. I'm going to stay away from those. I got burned by the guy who didn't know what he was doing, so I'm not going to do those anymore. It's something to think about, that it would really impact your business. You closed one renovation loan a month, one renovation loan a quarter. Doing 4 extra loans a year would impact your business. And if they become seamless and pretty easy to close because you trust the lender that you're working with, that becomes a great way to impact your business and close more loans. If you're a listing agent, think about, God, that listing's been on the market for 4 months and it's not budging. What's wrong? Maybe this is a renovation loan. Maybe I need to market it differently. This property is eligible for renovation financing. That sentence alone opens up your looks. That people look through it and they go, ooh, missing a kitchen. Yikes. Oh, eligible for renovation financing. Well, let me call on that. I don't know about that. Maybe that'll help me buy that house. So there's great benefits and impact to real estate agents' business by adding this to your repertoire to be able to know that you have an avenue for those properties that other lenders aren't touching.
Absolutely. So I think too, some final takeaways, about.
We also had a question come in as well.
Yeah.
Sorry, I just saw that Harvey had a question that, does this apply to condos?
Yes. But the tricky thing, as we know with condos, is they have to either be FHA or Fannie Mae approved. So I would always suggest for real estate agents, for loan officers, always do your due diligence. Let's make sure the condo itself is lendable. And then also for condos, the other layer for a buyer to be aware of, okay, I'm going to renovate a condo. I need to talk to the homeowners association to understand how my contractor can work in there. You don't want to close on a place and find out it's so restrictive to get your contractor to do work. He can only work from 10 to 4. They don't allow him to work on weekends. He can't have any materials in the parking lot. Everything's got to be up to the condo. They've got to work inside the 4 walls. So I always suggest and advise my buyers and my homeowners who say, oh, I want to renovate my condo. Talk to your homeowners association first and make sure that all that works, because you don't want to close alone and then find out the nightmare was the condo itself to get the work done. And we also want to make sure condos are lendable. But yes, we can do renovation loans for condos. I have one coming in actually today. And I was like looking it up. And so the real estate agent, she didn't know. The referring loan officer didn't know. And I'm like looking at lists and looking at lists and looking at lists. And I finally found a list and the condo's on there and it was approved at the end of last year. I was like, ding, 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 yay. So yes, Harvey, they are doable.
Awesome.
So other things to think about before we wrap up. Hi, Kimberly. I just saw your picture. You just popped up. So other things to think about. Don't be afraid of this. A lot of people are afraid of it or have read what you read on the internet. What you read on the internet, some of it is true, some of it's not true. But the bad rap for renovation financing is a buyer or a real estate agent worked with someone who was inexperienced. And that becomes the bad reputation on these products. They take too long to close. They cost too much money. It was a nightmare to get done. I'm approving a loan on the same guidelines as everyone else, and I have the mindset of what is needed in a methodical order, and I set the buyer, real estate agent, everybody up from the get-go. Here's our task. This is what we have to do, and we'll get through it. As we know in real estate, may not be a party along the way, but we're going to cross the finish line. And you've got to have perseverance to be able to say, okay, I'm going to tackle a fixer-upper and everything it's going to take to do that. But in the end, you've created your home. You've picked the finishes. You've designed the kitchen. You picked the counters. You did all that. And that's all through renovation financing. Any other questions? I'm going to do you want to do a call to action or do you want me to do a call to action?
Well, go ahead. You can do it, Todd.
So I always ask people, what should I take away from this conversation after I walk away from this webinar? Know that there are avenues for financing on homes that most lenders would not lend on through a renovation loan. Don't try to be the expert. Know not to miss an opportunity. If you see that listing that says no financing, that's a renovation loan. If you go into that listing and they showed you all pretty pictures and you round the corner and you go, oh, there's no kitchen cabinets. Oh, there's no toilet in here. They took out the tub. They didn't take a picture of that. Oh, we're done with this house. No, know that this is an opportunity for renovation financing. And the huge takeaway for anyone on this call would be, if you like what you heard and you work in an office with other agents and you'd say, gosh, my friend John would really benefit, especially the neighborhood that he's farming, this would be a great product for him. Bring Tammy and I in to do a Zoom call, a webinar for your office, little lunch and learn, that we can give you more information to your staff and to your colleagues in your office, so your whole office benefits and they get more business for the year. So that would be my call to action. Don't leave this and go, oh, that was fun. See how it can benefit you in the future. If you want to reach out to Tammy to connect with me afterwards, I can send more information to you and then set it up for a Zoom meeting, or depending on where you are, we do a live meeting and I'll come to your office. I have a car, even that I can get in the car and drive somewhere. I'm not afraid. So,
Yeah. And then also in California, Alex and Trevor and me and Todd can be like half on Zoom, half in office if need be. And then, yeah, no, we're just excited to share more information with you. We want to give you guys more options, especially with the market as tight as it is, to kind of get things, you know, in and done and get some more, you know, borrowers for you guys and just let you offer more options to them. So that way we're all the expert and keep them coming back with their referrals. So I thank you guys all for joining on the webinar. If there's no last minute questions, kind of just wrap it up. We're gonna send a little survey out so you can kind of let us know how we're doing. But any questions?
I would
All
just say real quick, thank you for the opportunity. And for those of you on the call, pat yourself on the back that you're wanting to learn. You're uplifting yourself and you're trying to better yourself in business. And this is a great way to learn a new product that maybe you didn't know about. So I appreciate everyone on the call and thank you for trying to benefit yourself by learning.
Absolutely. Thank you guys.
Hey, Tim.
Enjoy your day.
Can you hear me?
Bye-bye. Yes.
Thank you. Have a good one.
I'm sorry I'm so late on this call. But is there any literature you could send out to us?
Yeah, and Kim, we're going to send out the call to everybody on the newsletter. So we're going to put the newsletter out that'll have the webinar on it, and then also we'll send it out to anybody that maybe missed it or came in late. Or just wants it.
I'm sorry about that. For some reason, my email said 12 to 1 p.m. So, yeah.
Yeah, that dang time difference.
Yeah, so. All right,
That's
well,
okay.
I'll let you guys go. I'm not going to. Thanks.
Thanks, Kim. We'll get it sent out to you.
Okay, thanks. Bye.
All right, thank you.
Bye.
Bye-bye.
Great job.